Traders, Dennis Wilborn, the AutoPilot Trader. Last week, I put it in a lesson about maximizing your profits with the high probability TQQ swing trades. Well, we're going to today talk about why the TQQ ETF is not meant to be doing buy and hold type of strategies, because if you try to do buy and hold with this, you're going to get your face ripped off. As one of our viewers brought up, what happened? How would you handle a situation like in 2022 where the TQQ dropped almost 80%? Well, you know, if you're compounding your returns, you think, oh, well, yeah, I'm compounding my returns. What could that hurt? Well, 80% of your value would have been wiped out totally if you weren't trading a plan, a strategic plan, such as the AutoPilot trading system for to take advantage of these leverage ETFs. So let's go ahead and get into today's session and let me know. So ETFs, again, still the situation with exchange traded ETFs, I think it's one of the best opportunity to develop wealth, and but you have to have a plan to basically develop that wealth. And one of the things in trading the TQQ, the 3 times leverage ETF for the NASDAQ, well, one, it's not about buy and hold. I've restated that again and again and again. 2022 is definitely a downside for TQQ. It dropped almost 80%. Now, again, if you're looking to buy and hold, that would not have worked out for you very well. However, if you utilize swing trading rules, such as with the AutoPilot trading service, one, it's going to limit your drawdown and therefore allow you to exercise your trades in such a way to swing trade in and out of TQQ. On average, or historically on average, TQQ will give us a setup somewhere between 3 to 5 times per year. Now, those setups will typically run for about 25, 30, or 40%. And I'm not trying to pull out the whole the whole 20 or 30 or 40%. What I'm looking at, if I can get half of that, that's my target to be able to pull out profits from that. But then on the other hand, also, what about trading the inverse ETF, which is SQQQ? It goes up if the NASDAQ is going down. And if the market has turned into a bear market, it can provide some really juicy profits. But again, keep, having rules to trade by, very, very important. So therein lies the power of swing trading, both TQQ and SQQ. Let's take a look at what happens with this. We talk about the leverage return. And sure enough, and right down here in 2022, shows that 80%, this is what the chart that I put up last time, would give you a really nice, prosperous move. But in 2022, we actually had a downside move of almost 80%, wiped out everything we made in 2021. See that? And the NASDAQ itself, the Qs dropped 33%. So there's what our equity curve looked like through 2021. This was just a straight buy and hold. But with the leverage ETFs, occasionally you're going to get those outlier years where you're going to get whacked. And so that then is your equity curve, taking in consideration the big fall from the sky in 2022. As you see, our $118,000 dropped to $24,000. And so it actually wiped out more than, even though we gained 80% the year before, it wiped out, more than that, because it took us back to something below. It actually wiped out about 3 years worth of effort. And so this is where trading, something like the AutoPilot trading service and system, where we focus specifically on the leverage ETFs, 3 indexes and 4 sectors, we'll always be able to have something ready to trade going through the year, if we're patient. Again, remember that 4 to 5, 3 to 5 times being able to trade during the year. So a buy and hold strategy on a leverage ETF could rip your face off. I mean that seriously. So you have to have a plan that gets you in and out, well, get you out of harm's way. Now, I suggest on that, of course, with ours, we carry when we open a position, we carry a 5% stop loss. And then as we go up, we take our profits on the way up and then basically elevate our trailing stop. So we always maintain a profitable position. So max loss on our particular system is, 5%. On average, we trigger out at about 3.5%. Swing trading and leverage ETF, you can do it in both directions. That's what I think makes this very interesting. A lot of people have an issue if this chart is going down, a lot of traders. And so having the inverse leverage ETF, which goes up if the index is going down, makes it a little bit easier to trade. It fits our eye a little bit better. So what would happen in 2022 if we had followed something like the AutoPilot trading system? Well, let's take a look. Well, here we go. And this is for the just the year of, and this is TQQ. And as you see, there are various areas along this where there are TQQ ran starting on 128.22, 30%. 314, it ran up 59%. 524 ran up 37%. July 14th ran up 66%. And then in November ran up 42%. And this is a fairly common, even in a down bear market, that these leverage ETFs will get an excellent relief rally, if you will. But as you can see, that's a substantial move. Now, again, as I said, and this is what this line over here is, this is what happens if you just picked up half of that move? And as you'd see, that'd be 15%, 26%. It would give you an average return of about 24% across 5 individual trades in this particular instance. Well, where do those things show up on the chart? Well, here they are. Basically, there's one there. There's the next one there from a March timeframe, the 37% on in May. There's a one in July timeframe, and then one over here. Now, is it capturing every one of those? No, it's not. And so there's other times when you could have traded, but I was just looking at, what made sense from the aspect of what was putting in a pattern, such as this, triple bottom over here. Let's see if I can draw that in there. There we go. Anyway, this line across here. And again, here's another triple bottom here. So we're looking for the technical indicators to take us, and that's where I said, okay, there's 5 of them that showed good technical bounces that led to a nice little move. I mean, those are excellent moves. I mean, somebody would be happy with that move right there, 24%, across 5 times. We'll see a little bit later how that compounds out. Get rid of the drawings there. And so okay, next is basically what happens. So that gives us 24%. Well, what happens next? What happens if you also threw in on top of that trading SQQQ? As we see, SQQQ, now we have to be very careful with the inverse leverage ETFs because they are affected a lot more by the way that it meets the 3 times daily move of the underlying. And so it does, as you see, it doesn't quite go up in a uptrending line like the NASDAQ was coming down. However, in each one of these individual moves here is pretty significant, starting back on the 3rd of January 2022, ran up 68% very quickly. Then on the 29th of March, ran up 100%. And the June 2nd, 52%. And then August 16th, 110%. And then on December 12th, made a real quick run of 47%. Running the same type of approach here of just trying to pick up half the move, that would have given us a average return across 5 trades of 38%. So there's the first move, there's the next move, the next move, the next move, and the next move. And as I said, we're trying to capture just the middle section of those, just cut out the prime rib on that, if you will, the prime cut right out of the middle of that. And so that's why I estimate being able to pick up half of the move on the way up. So what does that look like on a compounding aspect for TQQ? As we saw earlier, I'll just look at TQQ initially and taking just the 0.5% of the run. As you can see, we started here about the 113, 140 level or something like that. And within $136,000, which where we ended up the end of 2021, but just focusing on the TQQ side and the opportunity there, as you can see, that compounded out very nicely, and a percent gain from the beginning of the year to the end of 149%. And so that's the other thing that I really like about trading the leverage ETFs, the index ETFs, is typically there is enough moves, like I said, 3 to 5 per year. And when compounded, it comes very, very close to at least 100% return, 100% return opportunity. It's not a promise that that's what's going to happen, but that is what I've observed, and I've back tested and I've looked at, that you have at least that, the potential is there for that kind of improvement or that kind of profit on a yearly basis. And so that basically covers what we're going to do. Hey, leave a comment down in the comment section. Follow us on the YouTube channel, and let me know what you think. The next video that we're going to be doing for the leverage ETFs, we'll talk about what about trading options on TQQ. Well, does it make sense? Is it a viable additional strategy that you could be taking a look at? I think you'll be surprised by the answer. So until next time, this is Dennis saying aloha and God bless.